comes in the last 20% of the time. And I think that is what we are experiencing right now. It's going to happen. So, Alan, how you doing, and what have you got for us?
I am fantastic, Mike. I'm doing well. You know, markets are in turmoil, but like you said, you've been writing about this for a long time. And, you know, I've been thinking about it and studying it for a long time. So I'm not like that surprised. And I'm also not that frazzled. And I have friends reaching out to me like, what is going on in the market? Do I need to be concerned? Do I have to change my strategy? And like, I empathize with them, of course. But it's also like, you know, if you zoom out, you could see something like this coming. Maybe not necessarily Trump in particular or tariffs or the exact reaction, but we knew that, you know, gold would outperform relative to stocks. Stocks were super overvalued and they had to come down eventually. And I think this is just part of what you've been talking about for more than a decade. So yeah, I guess it's a little bit nice to be sort of validated or vindicated a little bit. But at the same time, I do empathize with people who maybe weren't convinced by the argument or who were unaware. So maybe they're just sort of playing catch up to the thesis you've been talking about for a long time.
Yeah, you know, in the book that you helped me, you know, you were doing the research and all the charts and things like that along with me. And I did describe the shift in monetary systems. And to me, that looks like is exactly what is happening. On my last appearance, I put together a couple of videos that Mike looks like I'm reading a question here. So I put together a couple of video clips. Scott Bessent, the Secretary of the United States Treasury, saying that within the next 4 years, there's going to be an economic rebalancing or a monetary rebalancing in the world. So he's talking about a brand new monetary system. And then I put that together with a clip of him saying how much he likes gold, that gold is this thing that can't run a budget deficit. It can't do this. It can't do that. It's just this separate thing, and that the world used to be on a gold standard. In the first video, he also says that there could be that we need a Bretton Woods 2.0. And so I think you're going to see the Mar-a-Lago Accords pretty soon. I don't see Trump dealing with every country. He's got 80 countries now that want to cut a deal, and they don't want to be frozen out of the U.S. markets. The problem is China is the holdout, and they are playing real hardball with Trump. And if Trump's tactics don't work, you know, back in the 30s, first, we had the Smoot-Hawley tariffs, and they helped to plunge us into, they took a very severe recession and turned it into the Great Depression. And then today, we've got the tariffs that Trump is trying. And then right after the Smoot-Hawley tariffs, they nationalized gold, and they allowed the free market actually to revalue gold to $35 an ounce. We are talking about a revaluation of gold, but this time it isn't from 20 to 35. This time it is from $44 and 44 and 2/9 dollars, or 42 and 2/9 dollars?
42 and 2/9, yeah.
And 2/9 dollars, all the way up to at least market value today. But what people don't know is if you look at the H.4.1 Fed release, you see all of the factors affecting reserve balances. And the very final factor is currency in circulation. And it shows what backs that currency. And it is mostly U.S. treasuries. And then all of America's gold, it's like 99.7% of America's gold backs the U.S. Federal Reserve note, the cash that is in your wallets. 92% of the currency supply is bank credit. It's not created by the Federal Reserve. If it's digital, if it's in the bank and you've got numbers representing U.S. dollars, it's not Federal Reserve notes. It wasn't created by the Federal Reserve. It was created by the banks. But the Federal Reserve notes that are in your wallet are currently backed by gold at, I believe it is 0.4 cents per ounce, not dollars, but cents per dollar. Mm-hmm. And so to adjust that to a rate where the currency in circulation would be fully backed fully redeemable in gold, requires about $12,000 an ounce. Got anything to say about that?
It's an exciting prospect, and I'm glad I saw it ahead of time, or thanks to your help over the many years. So
Well,
yeah.
it really does look like we are headed into a new monetary system.
Yes.
And in the book that you helped me with, it says there's a section on something, I can't remember the actual title of it, but it's like the lyrics change here and there, and the musicians change, but the song remains the same. And I go over how history keeps on repeating. All of these pressures of a monetary system build up, and then there's an emergency conference. We had the Genoa Conference of 1921, I believe it was, and then the same thing repeated. They have these phony gold standards instead of just using gold, and that allows this disequilibria and pressures to build up, and then the foundation starts to crumble. And then they have the Bretton Woods Conference of 1944, and then same thing, phony reserve ratio gold standard that it was fake. And all these pressures and disequilibria build up. France starts redeeming all of their dollars for gold. And then Nixon takes us off of gold, and we have the Smithsonian Agreement of 1970, which just fell apart immediately. That was the one international agreement that did not work. And we fell into this thing of all these stupid floating exchange rates that make international business so difficult to conduct. And so we've been on the global dollar standard since. This was the default. The world was flooded with dollars because of the Bretton Woods system. And we went on this floating exchange rate, global dollar standard, and now that has built up pressures and disequilibria that are so great that it is falling apart. And Trump, in his second term, lose by being the one that stops kicking the can down the road. It really looks like we are no longer going to kick the can. All of the pain of every previous administration, going all the way back to Nixon, all of that, all of the cheating on the world monetary system is all going to come to an end during this administration, and it's going to be big. And what saddens me is that this is mostly right now we're seeing these huge inflows of gold, and we're seeing the gold price going up. But then I've got some evidence here that really shows that this is the whales taking delivery, and insiders, people that are connected with the government that know what's going to happen in the future, and they are front running. Goldsilver.com's mission was to save the middle class one investor at a time, and so far we're not doing that. So John Smith says ratio still near 100. Are we expecting a return to 70 or lower? Absolutely. But these things come later. Dan, could you put back up the page that Alan has open of, okay, so this is goldsilver.com, investing in physical metals made easy. That is really important right now. There's going to come a time where the physical diverges from, and it feels like it's soon. It might happen with the Mar-a-Lago Accords or whatever they are called. But physical is going to take off like a rocket, and paper contracts, which sets the spot price, are going to fall. So in here, we've got the gold price. If you could click on that, Alan, and we've got charts. So gold is currently back up near 3,100. So it fell a day or two ago, and now we're back up toward 3,100 again. And if you could click on silver now, silver took a bounce. There was an intraday, I think it was yesterday, where it was up at 109 or something like that. I'm sorry, not silver, but the gold-silver ratio. So we're back up at 31, and it was down at below 29. And I may still be making a purchase. My insiders will find out what I do. If you can click the gold-silver ratio, this is the historic part. This is why it is exciting to be alive right now. 99.1. over the last 2,500 years, the time that it's been where silver has been this undervalued compared to gold is measured in just weeks, just a few. And the thing is that the reason it's here is toward the end of last week, the commodities exchange increased margin requirements on futures contracts by 25%. And that meant a whole lot of people that were out on margin either had to come up with the extra or sell some of their position. If they sell their position, silver drops. And so that was the reason for the drop and the reason for the sudden bump in this gold-silver ratio. So I find these very exciting times to be alive. What have you got for me, Alan?
Yeah, absolutely. I mean, if you believe the thesis in gold, I mean, of course you and I do, but like, if you believe the thesis in gold, I mean, you should believe the thesis in silver by a factor of roughly 6. I mean,
Yeah.
to get back to the long-standing gold-silver ratio of roughly 15 or 16, which it was for thousands of years, if we're starting up at 100, silver has to outperform gold by a factor of 6 in order to get back to, stability, the historical norms. So, who knows when that's going to happen? It's not going to be, overnight. It will take several years. But both metals are extremely exciting right now. It's almost like you can't make a bad choice between, your allocation to one or the other. They're both going to be great. They're both going to outperform the stock market for a while. I was just looking up the numbers today.
They're both going to outperform everything else for a while, not just the stock market.
Yeah, I was just looking up the numbers today, and in the people are thinking, some people are just realizing now that like gold is like a possible thing they could have in their portfolio. They dismiss it for all these years as like silly or something like that. And so I get asked all the time, like, why would I have gold if it has no yield and it underperforms the market? And I'm like, have you looked at the numbers? Like in the last 25 years. Gold has outperformed the S&P, the Dow, and the NASDAQ by a factor of 3 in 25 years. So
I thought it was actually a little bit more than that. It's up 1,100%, and the S&P is up 280%, I believe. So it's a little bit more than a factor of 3. It's been the best performing asset class of this century, other than crypto. But when you start at zero, going from 0 to 1 is an infinite return. So you can't even measure crypto. Now, Dean Raymond says, should I sell gold and buy silver? I've got a lot of silver, and I'm about 95% silver and 5% gold. But I am considering buying some more silver, and there is a possibility I might sell some gold and buy some silver right now. I never give advice, Dean, but you need to follow your own heart. Here's what I can say. If you're going to do that, there will be times where you go, oh my God, I did the wrong thing. You're going to say that simply because silver is so volatile. It's going to be a wild ride. It's an easier market to suppress than gold. Can't remember what it is right now, but back in the 80s, the silver market was 1/300th the size of the gold market. You just look at the futures contracts and the times the price, what the value is that's being traded. And so it's much easier for the powers that be to try and manipulate it. But the free market overwhelmed all of the manipulations that they were trying to do. And it just shot past. It took until late 79 for silver to really show the big returns against gold. And it dropped to a gold-silver ratio of just 14. Currently, we're up at 99. If it drops to 20, you'll have 5 times the performance of silver compared to gold. I think it could actually be 10 times just because of all the pressures that are built up and because there isn't that much above ground silver. We've had a deficit now for the past 4 or 5 years where less silver is being dug up out of the ground than is being used up in industry. And so all it takes is monetary demand. Once gold gets a little bit too expensive and people are saying, oh, wow, it was only $250 back in 2001, and now it's $5,000 an ounce, I think the silver is a better bet. So, and then suddenly you're going to see that gold-silver ratio plummet. And so, yes, I think a very good strategy is trading gold for silver right now. And I do want to mention, a little plug for my own company. If you have something, if you've got a storage account with us, or if you have InstaVault, these things become very instant. You can sell your gold and buy silver very, very quickly, and the cost of doing so is much lower than if it's low blood pressure. Great name. The water is filling the Colosseum. Yes. And if you look at exponential growth, we are seeing something right now that is very exciting. We could see the blow off top and in gold and silver this year. It could be happening this year. It might take another 2 or 3 years. We'll see how this Mar-a-Lago Accord goes. And if you've got the Secretary of the Treasury saying that there's going to be a new world monetary system, and that's in my book. You know, I said that this was going to happen a couple of years ago. It's like 3 or 4 pages on it, and it's very entertaining, by the way. So if he said there's going to be a new monetary system, and another clue, he said we need another Bretton Woods 2.0, that's connected with gold. And then in a Tucker Carlson interview, he said how much he loves gold, and part of the funnest time of his life was when he was running his funds, and people called him a gold bug. And so these things are lining up to where something extraordinary is coming true. Now, people don't think that there's all these new monetary systems. Why? Because it only happens once in a lifetime. And we are, or maybe twice. I was alive during Bretton Woods. I mean, during the end of Bretton Woods when Nixon took us off but I wasn't alive when the Bretton Woods conferences happened. So I will see it twice in my lifetime. But you weren't alive. You were born under the global dollar standard.
That's right. I was born into fiat, 1988.
Yeah. So, chasing legends, a new Bretton Woods agreement sounds like a horrible idea. It didn't work the first time, as we can see. Yes. Well, this isn't going to be Bretton Woods agreement. It's going to be probably the Mar-a-Lago Accords. And it all depends. You know, Jim Rickards thinks we need a new gold standard that's 40%, got a 40% reserve ratio. It's these reserve ratios that cause the collapse eventually. You have to have, if you're using gold is great. And I'm on the record for many, many years and saying this hundreds of times, gold standards suck. Gold is great. Gold standard is a note that promises to pay gold. So it's an IOU gold. The technologies exist today to take all of the US's gold, digitize every nanogram, and be able to do payments and settlements in gold internationally or for the public. It actually backs the Federal Reserve notes right now. So if it was revalued to $12,000 per ounce, every single dollar would be 100% gold backed. So I don't know what's going to happen. I know if they come up with another phony baloney gold standard, that yes, another so many years from now, that thing will be falling apart as well.
Yeah. Well, good morning from Australia. Oh, thanks, Dale. Good morning. Thanks for tuning in. And yeah, thank you everyone for being here on the live stream. This is particularly exciting for me. I've wanted to do a live stream for a long time, and I'm sure many of you don't know this, but I used to be a teacher and a professor. So I used to have actual faces in the room while I was talking about different topics, and switching to video is a whole different format. So I wish I could see all your faces, but it's great to know that you're here. Please keep your questions coming, for Mike, for me, for all of us. I want $19 silver.
Yeah. So Dan, could you share my screen and and let me see. I don't know. Yeah. I want to show everybody this chart here. So this is U.S. Mint coin sales, and you'll notice that it's actually falling. This is Perth Mint. That was gold coins. This is Perth Mint gold coins and bars. It's falling. This is U.S. Mint silver eagles, silver coins. It's falling. This is Perth Mint.
Mike, sorry to butt in there, but we got a static frame there, so we're just stuck on the U.S. Mint gold coin sales.
Okay, sorry.
There we go. Now we got it.
Okay.
Now we're
Oh,
good.
you're not seeing my arrow. It was all animated and it's not playing properly.
Yeah, no, we
But
got you there.
U.S. Mint gold coin sales are falling. Perth Mint gold sales, gold coins and bars, falling. U.S. Mint gold, silver coins, so this is like silver eagles, falling. And this is Perth Mint, silver coins and bars, falling. This is not, I'm going to stop. I don't need to share this anymore, Dan. So this is not the public rushing in, which saddens me. The whole mission for goldsilver.com was to save the middle class one investor at a time. And this isn't the middle class that's buying right now. The people that are buying are the whales and the people that are on the inside. The people, I would not be surprised to see a whole bunch of congressmen, senators, and other people connected with the government that ended up doing very, very well from this wealth transfer. I was the first person to call this a wealth transfer. When I wrote my first book, Guide to Investing in Gold and Silver, back in 2007 and 8, it was actually 2005 to 2008. It was released just before the market crash in 2008. And I said, there was a book, The Great Economic Disorder by Larry Bates, I think it was. And there was a quote in there: wealth is never destroyed, it is merely transferred. And I went, oh my God, this is the greatest wealth transfer in history. And so I wrote that in there, and Robert Kiyosaki is going, what's a wealth transfer? How does this work? But basically, it's something that everybody participates in. There is no such thing as standing on the sidelines. You have to either position yourself so that wealth is transferred toward you, or if you don't take action, the wealth will be transferred away from you, through inflation or your asset class is falling compared to another asset class, which we call wealth cycles. You were involved with me on that, Alan. Mm-hmm. And so this is the time, I don't give advice to people, but this is the time, I probably will buy some silver after this, and I may trade some gold for silver simply because we're in this rarefied situation where it literally is only a few weeks out of 2,500 years with an opportunity like this. Hey, Alan and Mike, could gold silver ratio hit 1 to 150 or even 1 to 200 before leveling out? Well, I think that's a two-part answer to that. It's sort of a two-part question because it says before leveling out. It could possibly hit those. That is always a possibility. It's never happened in history, but that doesn't mean it couldn't happen. However, it's not going to level out at that price. It'll hit a peak and then drop back down to possibly a higher ratio. But the problem is what are the above ground supplies of gold and silver, and what are the mining ratios? There was Ray Dumont of, it was one of the mining companies. I used to own some of the stock up in Coeur d'Alene, Idaho. And I was talking with him, and, for a few thousand years, the gold silver ratio was around 14, 15, 16 to 1. And then it went all out of whack with the Comstock loads and the Silver Valley in Coeur d'Alene, Idaho, at the same time that we demonetized silver in the world went on off of, they relegated silver to just coinage, to change, and went on the gold standard. And so all of that, countries were dumping their silver stockpiles, their strategic stockpiles, all at the same time that happened. And that caused the ratios to go out of whack. They've been out of whack for more than a century now. And but the actual mineable supplies, Ray Dumont was saying, we're closer to 8 to 1. So there's 8 times more available silver to mine than there is gold. And then the fact that most of the silver that we've gotten at these low prices came as a byproduct from mining other industrial metals that are in demand when there's an economic boom. But when that economic boom goes away, So does the byproduct. When the primary producers of all of the copper and zinc and lead and so on, when that mining goes down, then silver supplies dry up just as there's monetary demand, just as the public rushes in to protect themselves. And so it's possible that we could see gold-silver ratios higher than where we're at right now. I don't think 150 and 200 is going to happen, but I could be wrong. We never know what's going to happen. But what I do know, well, I need to rephrase that. We never know what is going to happen, what and when it's going to happen. There are certain things that there are just fundamentals underneath where it almost becomes like a law. Yes, it's going to happen sometime.
Yeah.
What we're seeing here is stuff that, I thought all of this was actually a decade ago. And so I'm late, but it really does look like I'm going to be right.
Yeah, it's like the Heisenberg uncertainty principle. You can't know both the position and the velocity of an electron at any given time. Same is true in the investing markets. Like,
yeah,
one or the other, but you can't know both at the same time. So,
yeah. So Melissa Fernandez says, will the tariff war be the catalyst for the financial apocalypse that Mike has been predicting? Well, I've never said there is going to be. I said there may be. I don't think I've ever said that we're going into a financial apocalypse. All I am saying is that we know this playbook. We've had tariffs before, the Smoot-Hawley tariffs, and I believe that was 1932. Then in 1933, we nationalized gold, and in 1935, gold went from $20.67 to 35. So the dollar was devalued from 1/20th of an ounce of gold to 1/35th of an ounce of gold. Well, this time we're going to be doing the same playbook. So we know what that playbook caused before. It caused the Great Depression. We're going to be going from 1/42nd of an ounce of gold to 1/5000th, 1/10,000th, 1/12,000th of an ounce of gold. So it's a much, much larger devaluation. At the same time, probably going back to some monetary system that isn't where exchange rates become fixed again, where international, So there we are, that spike at the end, that is one of the rare moments in history where you have the ability to buy silver this undervalued compared to gold. Yeah, so there's, well, you know what? when we click on this longer term, so what's the peak there? Is that 120?
That's 122, and that's back in March of 2020. So the COVID shock, the
Right.
ratio hit 122.
Yeah, and that was basically silver falling much further than gold fell. So silver fell down to like $11 or something then, and I added about a third to my position during that fall, and so I've done very well on those purchases. But even at these prices, I still think there is a long way to run, and I am probably going to be, I may for the very first time sell some gold and buy silver. That might be a very good idea.
Yeah, so going back to that question we had a second ago of could the gold-silver ratio hit 150 or 200? I mean, of course, we don't know, but if you look how fast it shot up to its all-time high of 122, just a week prior, it was under 100. In a week, it shot up to 122. So, if there is some other shock like a COVID shock that either causes the price of silver to go down or all of a sudden gold gets revalued overnight or something like that, this ratio could spike and jump very, very quickly to like 150. No guarantees. Obviously, we have no idea, but it's certainly possible.
Yeah. So how do we get the message out to the general public? Because the one thing I wrote, I think, at the end of my first book is I don't want to see all of the big whales win and end up with all of the cookies. The whole mission of goldsilver.com was to try and save the middle class. I didn't care about getting the whales nearly as much as getting the small investor and protecting them in times like this. And, the book came out just before the crisis of 2008, and the people that followed that over the next 2 years, real estate fell by half, and gold by 2011 had pretty much tripled from its bottom. And so that means that if you'd sold, when the book came out, if you had sold a home and bought gold, you could have then sold that gold in 2011 and bought real estate and ended up with 6 times more houses. So you're talking about a gain in absolute wealth of a factor of 6. Quite amazing, actually. And it's just numbers. They're not my numbers. They're just numbers that are out there.
That's right.
Yeah.
We have another question from Slingshot 2004. Do you believe the new monetary system will be crypto-based or some kind of paperless money? What are your thoughts, Mike?
Well, like I said earlier in this program, you could take America's gold supply, which is our gold, not the treasuries or the Federal Reserves.
It's the people's.
Yeah. And if you're backing Federal Reserve notes, basically, you could, I mean, it is a CBDC at that point, which I don't like the idea of. But you could give every nanogram a serial number, and gold can be the world monetary system again. And the U.S. has the most of it, of any country. And so, it's possible to do these things. What would happen with the shock of a transition so dramatic? I have no idea. But, we have the range of possibilities is a nasty dip and then great prosperity on the other side, and then a global depression or even a modern dark ages. I mean, it is an enormous range of possibilities. I don't know. If Trump is successful, it'll be good, but he has to be successful very soon. He can't keep everybody in limbo like this. This has got to be crushing global GDP. People are putting off expenditures. Businesses are not making moves that they were planning on. They're shelving ideas, products, imports, exports. Everybody is holding their breath to wait and see how this plays out. And so Trump and Xi Jinping this is incredibly dangerous what they are doing. And if they don't come to terms very soon, the world could have a gigantic problem. But for the gold investor and the silver investor, I believe that they are more protected than everybody else. And through life, you can only do the best that you can. That's it. And so we don't know what's coming our way, but for me, this is the best that I can do. I've been getting ready for this. My first gold purchase was October of 22. And I've just been buying all the way up, writing about what I saw coming. The Mar-a-Lago Accords, I didn't call it that in my book, but it's in there and I've been, in 2009, I started reporting on something that I called the end of the global dollar standard. And we're very close now. So there's going to be some monetary shift, and it won't be the same global dollar standard that we have currently. And it isn't going to try. The current administration will get blamed for whatever chaos we go into. But it is actually the energy that is somebody sometime has to stop the insanity and just take all of the pain that's built up. And Trump doesn't have anything to lose, other than his reputation. This is his final term. And so he can't run again. So if they blame everything on him, that's just the way it goes. But it is the responsibility of every president from President Nixon through to today, actually going back even further, and the responsibility of everybody at the Federal Reserve since 1914 when they opened their doors for business. So the gold to Dow ratio just broke down in favor of gold for only the 4th time in the last 125 years a week ago. Should we be going over that? So, I haven't, there's so much going on, I have to admit, I haven't really looked at it recently, but the Dow Gold is one of the things that I've been betting on and commenting on. And I remember when I used to tour with Robert Kiyosaki back in 2005, 6, and 7, I was doing these big Learning Annex real estate expo events where Robert had a special on PBS, and tens of thousands of people would show up at these things. I missed the San Francisco show, which was 60,000 people in the audience. But in Los Angeles, I spoke to 30,000 people, and I was showing them these charts. They had like a dozen 40-foot big screens going throughout the hall. And I was showing them the Dow-gold ratio. They had never seen things like this before, and explaining that the Dow has been crashing since the year 2000 measured in gold. You think the Dow is going up, that the stock market is going up. Well, it's not measured in gold. So now the market is not going up measured in gold. And we've had such a great return in the last year and a half on gold that it should be. Are you looking at the Dow-gold ratio now, Alan? I see you.
Yes, I am. I'm trying to dig up some things on my computer. I was just working on the Dow-gold ratio today. So yeah, I put this chart together, and we're in the 12s with yesterday's numbers, right? I didn't update it with today's close. But as of yesterday, the Dow-gold ratio is 12 point something.
Wow.
And yeah, and going back here, this is a logarithmic chart, so it's a little hard to interpolate here. But if I remember, this was about 22. This peaked at about 22. Yeah. So gold has outperformed the Dow by almost a factor of 2 in like the last 5 years. So
yeah, okay, ever since gold bottomed and started coming back. So, I want to point out to everybody, this is probably annual data or monthly.
This I think is daily data. Yeah, this is daily.
Well, the ratio in 1929 was 18, not 15 or 14. Because it was a breath away from the Dow was a breath away from 400 points. It was 390 something, and gold was fixed at $20.67 an ounce, and then the Dow fell all the way to 40.22 points in 1932. And so I don't think that is not intraday data. I know that, but anyway. So it went, the bottom in 1932 was a ratio of 2 ounces of gold equaled the points of 1 share of the Dow. In 1980, it was gold and the Dow were $873 and 873 points at the same time. That was an intraday high. And so it was a ratio of 1. And so when it's further out of whack to one side, when it overshoots, it's going to go further to the other side. Now, that didn't go right along with a shift in the world monetary system. I think that it's very possible that we could be seeing gold's price at double the points of the Dow. If it's because of gold going up, that's great. If it's the Dow going down, a lot of people are going to suffer a lot, but I have a feeling it's going to be a combination, because that revaluation that was going on of the stocks versus gold from 29 to 32, that is only that's only the stock market moving. Gold was $20.67 an ounce. The revaluation from 71 to 1980, that is pretty much gold moving and not stocks. The Dow hit its head on 1,000 points in 1966, and it chopped. So it did go up and down. That big jag in the middle is actually a bear market in gold and a bull market in the Dow and S&P from, I think, it bottomed at the end of 74 and then went up throughout 75. I think that's what that jag is in there. So they're both moving. But basically, the Dow hit its head on 1,000 points and couldn't break through until 1982. That whole line falling there is pretty much gold, going from $42.22 to $873, down to just 1 ounce of gold equaling the points on the Dow. And now we have both of them moving simultaneously, and that is a magnifier. And I truly, so we're at how many? You said 12?
Yeah, about 12.6, I think. Yep.
Okay, so you should be able, if you're in gold right now, so this is gold, not silver. If you're in gold right now, and it does go down to 1, you're going to be able to buy 12 times more stocks with your gold. If it goes down to a half, it's 24 times more stocks, and that's from where we're at right now. I've been riding this ever since the peak, and this chart here is basically what convinced me to buy gold. I went, oh my God, we're so overvalued with stocks, and gold is so cheap. So this is the reason that I got involved in all of this back in 2022. 2002. Sorry.
2002. Yeah, that makes sense. Yeah, this is one of the more convincing charts for me as well. When you taught me about wealth cycles, and the Dow-gold ratio is like one example, because it's like, we know the dollar is phony baloney, like it's voodoo. It is. We know it's a terrible measuring stick. So if you're, curious about the price of gold measured in dollars, that's half nonsense, right? It's just pay attention to how many ounces of gold you own. Similarly, how many shares of stocks do you own? And then, you ride out the volatility measured in dollars. But if you want to, build your wealth over time, you just cut out the middleman, the voodoo dollar, and just, look at these two assets compared to each other. It makes so much sense to me. And then you just be patient, because these swings take a couple decades to play out. So you just stock up on one, no pun intended, but you stock up on one of the assets, wait a couple decades, and then transfer it into the other and stock up on that other asset. So it seems like such a foolproof, easy, low stress, easy way of investing. So I'm super thankful you taught me about it, Mike.
Well, thanks. You can see here also that there's sort of an equilibrium where they're both in fair value to one another. If you look at 1910, 1920, between like 2 and 4, or maybe even 5, somewhere in the middle of this whole thing. And so it shows that we're still in a hyper bubble with stocks, and gold is undervalued. And this is one of the things. Gold has been taking a run from 250 all the way up to 3,100 at this point. And a lot of people are going, oh, I missed it. In my opinion, nobody missed it. This is still one of the greatest opportunities in history. I've often said there are these rare moments in history where the safe haven asset, the place that everybody runs to in times of crisis, becomes not just the safe haven, but also the asset class with the single greatest potential gains in purchasing power. This is where we are right now. That's where we are. And so I hope that more people, but I've been hoping that for a long time, that more people take the opportunity to. So what's this?
Yeah, this was just another chart I fished up while you were talking, because you said something that like the opportunity isn't over. And once upon a time, I put this chart together. You can look at the time on the bottom. This is basically the year 1979. So these are the different months of 1979. And that, of course, was the end, the final year of the 1970s bull market. And the price of gold more than doubled, in that calendar year. It was like 125% or something like that. So imagining, the price of gold doubling in a calendar year, that's amazing. And I just worked backwards from the final day of the bull market. And I sort of had this question of how long did it take for the final doubling to happen? And from the final price of 873, if you go back 42 days, the price was 431. So it took 42 days for it to double at the very end. And then if you go back before that, the tripling, ignore the doubling, and then just say the tripling was 166 days, so less than 6 months, and a quadrupling, so 2 doublings, was basically 1 year. So I don't think we're even at the final year or the final 371 days of this bull market. But if it plays out just like the 1970s, we could get a quadrupling in price in the final day, in the final year. So
3,000. So you're talking about $12,000, which is what we would need to make the Federal Reserve note fully redeemable in gold. Now, I do want to point out to everybody that the very first data point on this chart is the first day of 1979 at $217 an ounce. And so that is sort of feels comparable to where we're at. It isn't 44 or 42.222 dollars where this chart starts. This chart starts there's already been a bull market going on here for like 7.5 years before this chart starts. So, yeah.
Exactly. Yeah. And I eliminated the volatility just in case anyone missed that. This just to show you generally what happens. But of course, there's a lot of volatility along the way.
Sure.
And there's a lot of doubt that people have. Oh, it's over. I missed it. Obviously, it's extremely hard to call the tops. But if you understand what has happened in the past, like something like this, that probably helps you understand that you didn't miss it yet and that it may not be over, that kind of thing. So,
yeah. You know what? If you could do a simplified close-up of, don't do it now, but for a future video of the, you already did one, we need to simplify the chart of the gold-silver ratio of the bull market of the 80s so that we can show people how choppy it was and how a lot of times people would think, oh, I've made the wrong decision by picking silver. But then at the very end, they got validated. I mean, silver was the right move for them. Yeah, like I said, I hate to see all of these whales and all of these people taking positions that are insiders. And so let's all remember goldsilver.com's mission, save the middle class, one investor at a time. And the book, Great Gold and Silver Rush of the 20th Century, I still suggest to everybody, if you want to understand what's going on right now, buy that book, because I wrote about this shift in the monetary systems there and the reason that it was going to happen. And it came out in 2023. Here we are pretty much 2 years after the book came out, and it's actually happening right now. So, anyway, I want to thank everybody for watching. Thank you, Alan, for being here. This was a great live stream.
Thanks, Mike. Thanks, everyone.